The merger ratio between Dena Bank, Vijaya Bank and BOB is out for the moment. It is price adjustment which is evident. BOB started gap up but now is stabilizing, but Dena Bank and Vijaya Bank, they've yet to recover. Karnam, Sekar, Managing Director and CEO with Dena Bank now joins us. Mr. Sekar, good morning. Thank you for joining us. Analysts and shareholders are saying that the merger ratio is in favor of BOB and it is valuing Dena Bank at a 20% discount.
See, this valuation before amalgamation process started, we have appointed valuers for each bank separately, and there is a huge process for that. So these valuers were approved by appointed by the board for individual banks, and over and above valuer there was a provider of fairness opinion. So these valuers, they have taken almost a month to value each bank. And all three valuers, they sat together and they followed the approved, accepted methods of valuation. So like comparative company method and market value method, whatever was the share price in the last few, and net asset value method. And all these methods, they have computed the value, and then they have ascribed different weightages for these methods. And then finally they arrived at this ratio. And yesterday each of the board of each bank, they sat and they have examined, they have scrutinized, they have discussed in detail for almost an hour, and then finally it was approved. And as far as the Dena Bank board is concerned, each of the board members, they have had a serious discussion, debate, and finally we are all of this unanimous opinion that this value is very fair, and we went by the valuer's opinion and the fairness opinion, provider's opinion. Likewise, all three boards, I think they have done this valuation. This is an accepted process. Each merger, any amalgamation, we will do this, and we have done as per legal requirement also.
So with all the approvals and ratio out of the way, now there would be operational integration process. Do you see any challenges on issues like culture, bank book overlap, reallocation, change of team?
Any merger, any amalgamation will have all these challenges, and I used to keep saying announcing merger and announcing the date, that is one part, but actually after the date is announced and then after we start the process, that is the actual process. And after the date of amalgamation also, digesting this merger also will take some time. So that's a huge process. Any amalgamation will have to undergo this. And pre-amalgamation, amalgamation and post-amalgamation, if you divide it into three phases, all three phases are equally important, and we need to work on that. And pre-amalgamation is one aspect, but post-amalgamation will have to digest three different banks into one bank and then move ahead. And all the synergies, we should not lose out on any synergies. Now, before the amalgamation, we are thinking of this synergy would come from Dena Bank, this would come from Vijaya Bank, this would come from Bank of Baroda. And after the amalgamation, all three synergies, we should not miss out on anything. We should not lose out on anything. All the strengths we need to capture, all the brand image we need to capture, all the customer loyalty we need to retain, and all the employees' productivity we need to improve. So all these things we need to ensure. So it's a process. Yes, it's a very complex process. Any amalgamation, digesting three banks into one, is a complex process. So we need to go through that.
Right. So, Mr. Sekar, do you think employee strengths of the bank will be very high after the merger, and will this need a lot of allocation or reallocation of work?
I don't think so, because right now Dena Bank may not be doing some aspects of banking business. Vijaya Bank may not be doing some aspects of banking business. Now after the amalgamation, as you are aware, this would be the second largest bank in the country, public sector space. So we need to do all complex, varied aspects of banking. So that is one aspect. So we need a lot of manpower. And second is banking industry in general, and these three banks in particular, both 1920 and 2021, we have a lot of retirements. So that we need to take care. And we may have to expand also. See, now one bank, Vijaya Bank, is south, and Dena Bank and Bank of Baroda is in north. And east and all we need to expand depending upon the business potential. So I don't think it will be a huge workforce we need. We need this workforce and we need more also going forward, because business is going to grow substantially. Now that NPA issues are almost recognition, at least identification, and a part of resolution has already taken place. Going forward, once this problem is outside our focus, then I think business growth would be the main focus. Next 2, 3, 4, 5 years, huge growth has to take place. And being the second largest, we will be appropriately placed to capture this growth cake. So we need to have more people.
Okay, but can you put a timeline to the synergy gains from the merger, and can it take a long time to accrue considering the challenges?
Yeah, synergy benefits, see, at least 6 months to 9 months digestion would take place and integration of all the processes and all. And synergy should come from 2021 onwards. 1920, if you give for this settlement and consolidation, 2021 onwards, synergy should come. And that is our internal assessment.
Mr. Sekar, hi there, good morning. Now, we understand that via this, Bank of Baroda will become the largest lender. What benefit and what kind of scale do you think they can get?
See, each bank, as I said, has its own distinct advantages. For example, Dena Bank has a huge CASA base. So, if this is coming to the amalgamated entity, so we will have effect on the cost of funds. Cost of funds would go down. By how much, that we need to explore. That is one. Second, as the balance sheet becomes bigger and bigger, our appetite to take more large credit exposures would go up. Especially when the limitation comes from RBI guidelines next year onwards, our balance sheet size also is very important. So we can take bigger share in the bigger corporate credit. So that is second aspect. And third, when we have the huge branch network next to State Bank of India, so our reach to the market would be much more, especially MSME segment. MSME segment is going to be the next big market opening up for the credit growth. So in that, this large bank with huge network, we will have huge reach and we will have a distinct advantage. And technology and HR, systems and procedures, our capability to invest more would increase. And bigger the size, growth would be bigger, profitability would be bigger. All synergies, if they come into place, I think our profitability percentage would also go up.
And finally, do you think that this merger marks the first step towards rationalization in the number of operating PSBs and the emergence of 4 to 5 large banks that can over time manage operations better?
This is the philosophy which is being debated for the last 2-3 years. So we need 3 or 4 major nationwide banks and maybe few smaller banks with regional approach. So I think the entire industry is moving in that direction. First was the State Bank of India, merger State Bank of India along with the associates, they have done that. And now this would be public sector space, this would be the first major experiment. So if this experiment succeeds and if this really throws out all synergistic benefits, maybe this thinking can be further expanded and maybe further implementation may take place. Yes. Because this has been debated for the last 2-3 years. This has not just happened just like that. So after a lot of debate, this was initiated. So if this works, I think maybe industry will move in this direction.
Well, yes, that is the intent, rationalization of these operating PSBs. Many thanks for taking time out and giving us a view as to how you're looking at the overall merger dynamics.